Okay. Mr. Karwa, actually we wanted your attention more or your views more on the mid-cap end. Do you expect the mid-cap index itself to be a major outperformer in a 12-month period? And more importantly, identify specific stocks. You know, sectorally, all of logistics has gone up, all of auto ancillaries have gone up. Do values look stretched? Tell us where values lie according to you in the mid-cap space.
Yes, for mid-cap, I mean, from a 1 year, 2 year perspective, it seems that the mid-caps have run up sharply and have outperformed the large-cap indices. But if you look at the mid-cap indices from a 5 year perspective, still there is a lot of catching up that the mid-caps as a whole have to versus the large-cap indices. So primarily, so you may from a short-term perspective feel that they have run up sharply. But I believe that still in a growing economy, it's the mid-cap stocks which will tend to give you outsized returns versus the large-cap stocks. So that's the basic premise that we work on. But having said that, I think mid-caps, you cannot brush all mid-caps with the same brush. You will have to be very, very bottoms up in terms of identifying and investing in them. There, rather than trying to do sectoral attempts in terms of, okay, which are the sectors, and then I would like to look at which mid-caps to invest. I think it's primarily based on bottoms-up kind of an approach where valuations and individual growth opportunities should be the key theme. You mentioned about auto ancillaries. Yes, I think if there is a recovery in the HCV cycle, then many of the auto ancillaries which have been struggling for want of growth, and also many of them have been developing good export opportunities. So they should do well, and I think they are also reflected in the valuations that many of the stocks have gone through. So we are bullish on auto ancillaries. I mean, we have seen the kind of growth which an Amar Raja has had, and we still believe that despite it having run up so much, it will still give you good returns. Other stocks that we like in agrochemicals, or we like Tata Chemicals, that's again a large mid-cap, again where we believe that the balance sheet size correction in terms of debt reduction which is happening should add to the enterprise value and the market cap of the company. We are again bullish on the UPL, United Phosphorus, where we believe that versus peers, the valuations are much lower. It's a global company available at very, very reasonable valuations. So I think the list is endless as far as where you need to be on a bottoms-up basis rather than trying semantics.
All right, we leave it at that. There's some problem with the video, but we got the best of your stock list that you told us. So thanks so much, Mr. Karwa, for joining.